Why does Polygon exist? What does it want to achieve in the world? The vision is to create infrastructure that will power this global value layer or global network of value. Now, over the past few decades, we've been able to establish the global network of information that we call the internet, which has made profound changes to all of humanity. As a result, we've democratized access to knowledge and information, which has enabled anyone from anywhere in the world to attend an MIT Comp Sci course and acquire basically any type of knowledge that was previously not available globally. Now, this has been a noble achievement for all of society and humanity, but we're still missing something. We need a similar network of value. So even though we democratized access to information and knowledge, we're missing this access to the global economy, to the ability to transfer value. And this access to transfer value is not democratized. We still have 2 to 3 billion people that are unbanked. So Polygon's vision is simple. It's to help society build this global network of value to allow anyone to create, transfer, receive, or program value. Polygon's mission, therefore, is simply to create the infrastructure to support this vision. And that can make this vision a reality. Now, with where Polygon is right now and this conversation today, you're going to learn that they're at the place where they finally have the full tech stack to enable this. They've created all the tools to make this vision a reality. And today we have joining us one of the co-founders, Brendan Farmer, to talk about exactly what Polygon is doing and how they're making this vision a reality. Welcome to the show, Brendan.
Hey, Jay. Really appreciate you having me.
Super excited to have you, my man. It's not every day that we get a founder or co-founder of a leading chain like Polygon, and we are big believers in Ethereum, big believers in all chains. We're not chain maxis here at Web3 Academy, but definitely big believers in what Ethereum is building, and got a shout out to you and the whole team because you are contributing to the Ethereum ecosystem in massive ways. Now, I want to go back to the beginning of maybe your journey. It's 2021. You've been building an L1 called Mirror, and that is a ZK-focused L1, and you've been approached by Polygon, or maybe you approached Polygon. I'm actually not sure how that deal happened that brought you into the Polygon ecosystem. So take us back to that time. Where were you? What was going on? And what was going through your head that led you to eventually be acquired by Polygon?
Yeah, sure. So I would actually go back even further and go back to 2017, 2018 and how I got into crypto and how we started Mirror. And for me, it was, I was living in the Bay Area at the time and working on this like really sort of like depressingly boring web startup that I didn't found. I was just an engineer. But I was like wandering through Stanford's campus and I like wandered into this auditorium where Vitalik was giving a talk on the plasma paper that he had just authored. And he was up on stage and I got out and I started reading the paper. And I'd been sort of interested in Ethereum for a while and had been going to meetups and stuff. And there's this part of the paper that says, we're outlining this like game theoretic and crypto economic mechanism for guaranteeing security. But you could also just do this with zero knowledge proofs when the technology is ready. I'd sort of like vaguely heard of zero knowledge proofs. I kind of knew what was going on, but that really stuck with me. And it kind of kicked off this like years long research into what zero knowledge proofs were, like what the technology was, that kind of culminated in 2018. I went to the inaugural Zcash conference, ZCon Zero. I met my to-be co-founder, Daniel Lubarov, and we started Mirror, which was a ZKL1 that was focused on using zero knowledge proofs for privacy and scalability. And so I guess we got kicked off in 2019. And in 2019, that was kind of the bottom of the bear market. It was like really difficult to raise money. You could sort of only do it for an L1. Like L2s were kind of known, but they hadn't really gotten traction. And so we had positioned ourselves as an L1 that was going to do these things that, Ethereum couldn't do. And so we built and we got started just as COVID hit, which was a really interesting time to be founding a company. But by 2021, it was actually really clear that all of the activity and the sort of dynamism and the developer mindshare was in the Ethereum ecosystem. And so we were like looking down this tunnel of building Mirror and being like, well, we're going to build this L1. It's going to have an entirely new developer experience. It's going to have new developer tools that are focused on this ZK environment. And in all likelihood, no one is going to use what we're going to build. And we're looking over at the Ethereum ecosystem, and we're just seeing DeFi summer and NFTs are taking off. And it seems like people are actually using crypto and there's so much excitement. And so when Polygon reached out to us because they were trying to transition into adding ZK talent into Polygon, it was actually a really exciting opportunity because it meant that we could sort of have a platform to contribute to the Ethereum ecosystem, which was how Daniel and I got into crypto in the first place. And so there's sort of this nice feeling of coming full circle and being able to first use something or build something that people would actually use, and second, do it in the Ethereum ecosystem.
Not to mention, at that point, ZK tech was still so hypothetical. It's hard to remember because now it's such a standard in our blockchain lexicon that we're yeah, of course, ZK is the future and that's the way we're going in order to scale. But it wasn't the case back then. So shout out to your investors who believed in you to allow you to go do something that was so hypothetical. And then to the Polygon team. Now, what's interesting is Polygon acquired you, but you weren't the only ones that were acquired. They acquired a few other teams at the same time. Tell us a little bit about, I guess, from your knowledge of what was Polygon's decision to pick up 3 different teams. It's a very interesting business approach. Sometimes you do that in order to get them to compete and only one will survive. I don't necessarily think that was the case here, but interested to hear your perspective.
Yeah, so it was definitely something that I think invited some skepticism from us and from other people in the community. I think it looked from the outside as though Polygon was just spraying and praying and kind of trying to convert money into tech talent. And I actually don't think, I think that the way that it worked out actually was a lot different. If you actually look at what each team was focused on, for us, we were super R&D focused. So we knew, as you said, that ZK Tech was still hypothetical, that we needed orders of magnitude improvement on the underlying technology in order for this to be viable in a production setting. And so we were building Plonky 2 and now Plonky 3 and just focused on pushing the underlying tech forward. Whereas Hermes, which was another company that was acquired by Polygon, they were focused on shipping. Jordi is obsessed with products and getting something that's used by people in the Ethereum ecosystem. And so it actually worked out kind of brilliantly because we were able to take our tech, which was still kind of in the R&D phase when we were acquired by Polygon, and we were able to transfer it so that it could power the prover for the Hermes ZKVM. Mm-hmm. And so this actually worked out really, really well because if we had sort of been alone or we had been forced to converge rather than operating as separate teams, we probably wouldn't have been able to pursue this kind of speculative R&D project that actually culminated in 100x proving system. And Hermes wouldn't have been able to use super efficient provers. And so it actually ended up being super complementary. And this is all to say nothing of Polygon Maiden, which is focused on an even further looking VM improvement. And so I think it's actually worked out really, really well.
Which in hindsight, I'm sure the Polygon M&A team would take a nice nice win for that one. But it's great to hear when it works out like that. Now, whether it's going back to that Stanford lecture with Vitalik talking about plasma, or it's Polygon deciding to acquire 3 ZK teams, why is ZK the best solution for privacy and scalability?
Yeah, so I think that's a good question. The privacy side is really easy to answer because it's basically the only way that we can effectively provide privacy. And so there it's sort of there's no competition. On the scalability side, it's really, really nice because it allows us to provide proof that a ton of transactions or a ton of computation is valid, that it was executed correctly. And so obviously we have things like rollups, which I assume people have heard of. And the basic premise is that we can take a ton of transactions that we could never fit on the Ethereum main chain, and we can execute them off chain, and we can generate a proof that all of those transactions are valid. And that proof basically constrains the operator of that rollup into only behaving honestly and only accepting valid transactions. And so this is a really, really powerful thing because the alternative to zero knowledge proofs are optimistic rollups, where we have this game theoretic mechanism that where if there's an invalid transaction, someone can detect it and they can provide a fraud proof. And then there's a dispute resolution game and it works and it provides security, but it's not as good because it enforces this challenge period where you can't withdraw funds via the native bridge from an optimistic rollup for 7 days. And so if you look at what this forces on users of optimistic rollups, they have to use third-party bridges to withdraw their funds quickly. And so in aggregate, like tens of millions of dollars have been spent on third-party bridges. Like liquidity providers have to accept duration risk where they're locking up highly volatile assets for 7 days. And so for a single chain, the optimistic setting is not great. For a multi-chain setting, which we'll get to later in the show, we have like a ton of different chains and we're horizontally scaling to meet like internet scale demand for crypto in one space. It's actually really bad because with zero knowledge proofs, we can move assets securely and trustlessly between those chains as soon as we generate a proof. But for optimistic rollups, we need to preserve that fraud proof window for every single cross-chain interaction. And so users will never accept waiting 7 days to transfer their funds from one chain to another. And so if you think about like the full vision of what we're trying to build, which is an internet scale crypto ecosystem, like we believe that ZK is the only way to do that.
Okay. Yeah. And it makes total sense. So before we jump into the various elements of Polygon and the two main elements that you've announced and launched recently, and I just want to give an overview because Polygon is quite a broad ecosystem. We've just talked about the fact that there's 3 ZK teams. That alone is somewhat confusing to understand, let alone all the other pieces of tech within the ecosystem. Can you give us sort of a broad overview and then we'll dive into some of them?
Yeah. So I think that one thing you can say about Polygon is like we haven't always been good at providing like a focused and easily digestible story about what we're building. And I think that we're getting a lot better at that. And so the way that you should think about Polygon is it's this multi-chain ecosystem that's built on Ethereum. And each of those chains is powered by what's called the Polygon CDK. That's the Polygon Chain Development Kit. And so we have existing chains that are run by Polygon. So these are the Polygon POS chain, which is a side chain that has a ton of activity, a ton of TVL. We have the Polygon ZK VM, which is an EVM equivalent ZK environment that's an L2. And in the future, we'll have like Polygon Miden chains. But CDK is sort of the building block for this ecosystem. It's what allows anyone to spin up a new chain in the Polygon ecosystem. And so with this universe of chains, we have what's called the Agglayer, which is the infrastructure that allows you to sort of stitch together these chains into what will feel to a user like using a single chain. So it's what creates this environment of unified liquidity and state and users that we think is kind of the final answer to crypto scale.
Right. And we'll get into the Agglayer later in this episode. One thing I just want to clarify right now is Polygon POS is the chain I think most people know. Like when you think Polygon, anybody listening, you're thinking Polygon POS, even though you probably don't call it Polygon POS. You probably just call it Polygon. And that's where you're using Matic as the currency, as the token for gas. So that's the chain. We've at Web3 Academy minted a bunch of stuff on Polygon POS. And Polygon ZK EVM is a separate chain, a separate L2. Now, is the plan that eventually Polygon POS will also become a ZK EVM chain?
Yeah, exactly. And we can talk about this a lot with the Agglayer, but the reality is today is that there's a ton of liquidity and value that's on Polygon POS, and there's no like easy and trustless and secure route for that value to be shared with ZKVM or with other CDK chains in the Polygon ecosystem. And so the plan is to upgrade the Polygon POS chain so that we can like basically add all of those users and that state and that value to this unified ecosystem that we're building.
Right. So the objective here is that you can always put settlement on the main layer, but always have the ability to exit on mainnet, all within the Polygon ecosystem with shared liquidity and shared state. Okay, let's talk a bit about the ZK EVM and the new Prover Type 1 that you just launched. I'm guessing most of our listeners do not know what a prover is. So maybe you can give us an idea of what a prover is and what a type 1 prover is. I know that fits into 4 or 5 different types. I can't remember exactly how many there are. Can you give us a sort of intro to that?
Yeah, sure. So prover is what allows us to generate zero knowledge proofs that show that a ton of blocks are valid on an L2. And so basically the proof is what allows us to move funds off of that L2, because we can prove that, okay, we have this updated state, a bunch of users wanted to exit, and you can process those transfers or those messages because you know that that block is now finalized as soon as the proof is accepted by Ethereum. So that's what a prover is. And then with like ZKVMs, there are a few different types of ZKVMs. So there are some, and basically Vitalik came up with this framework that classifies them according to like how EVM equivalent the experiences for developers and for users. And so at the far end of the spectrum, you have like a type 4 ZKVM, which is, I believe, ZK Sync and Starknet. And basically it's an environment that's actually not the EVM, but it supports compiling Solidity programs, which is what EVM code is written in, to run on this ZKVM. So you have this compiler, and maybe there's some compatibility issues, and you can't use existing dev tooling, but overall it's like pretty good. And maybe there are some advantages to using a ZKVM. And so if you move further along the spectrum, you have a type 2 ZKVM. So we can kind of collapse type 2 and 3. And a type 2 ZKVM presents an environment that is EVM equivalent for users and for developers. It presents the same environment. You can use your like existing Solidity code, you can use your wallets, your dev tools, but on the back end, like the way that Ethereum manages state is different from the EVM that's running on Ethereum. And these changes make it a little bit more efficient to generate zero knowledge proofs. So you can have this new chain that's running on a type 2 ZKVM, but you can't use a type 2 ZKVM prover for existing EVM chains. Like you can't use it to prove an optimistic rollup or the Polygon POS chain. And so that's where type 1 comes in. Type 1 allows you to take any existing EVM chain and immediately start generating proofs for it. So this could be the Polygon POS chain. It could be an optimistic rollup. It could even be the Ethereum mainnet. And so that's what we're really excited about, is we delivered a type 1 ZKVM that is really, really efficient and really, really cheap. So the average cost to generate a proof for a transaction on mainnet Ethereum is at 1/10 to 2/10 of a cent. And this is going to come down by 30 to 50x by the end of the year. And so this is like super, super cheap.
This is a huge deal. I think that these tech advancements get lost in price action of the market and the more overwhelming narrative. I wish more people were talking about Agglayer and type 1 prover that you guys just built, but it's not as sexy as some meme coin that's pumping. Unfortunately, no diss to your team or anything.
No, of course.
That's where the current market is focused. But what's so amazing to me about this is this type 1 prover, it's going to allow a chain like Polygon POS to come on to become a ZK EVM compatible. But also, you mentioned optimistic rollups could also use this type 1 prover, and you open sourced this type 1 prover, which is like just the most Web3 and crypto native thing you could do to really embrace this open source concept. In Web 2, that would have been absolute, like, protect that IP, do not share that with anybody. Talk to us a little bit about what you guys made, what led you to make that decision of open sourcing it, and really like, what will that allow down the road in relation to an optimistic rollup?
Yeah, sure. So I will say, I think even a lot of Web3 people were a little surprised and taken aback by the open source the type 1. And I think, like, if you look at other projects, like Arbitrum has a restrictive BSL license on a lot of their tech. And I think that there's like a defensible and reasonable justification to take that approach. And so for us, like, if you look at it on the surface, it seems like, oh, you guys develop this amazing tech and you're just going to give it away to your competitors. And now they're going to be like on the same footing as you. And that's like a really stupid, naive decision. And I think if you look one level deeper like it's our view that in the long run, execution layer tech will be totally commoditized. Mm-hmm. And from that perspective, like what we're building with the Agglayer is really, really important, because the Agglayer is actually what allows us to scale beyond the limitations of a single chain. And so for us, like the network effects develop around the Agglayer. Like the Agglayer is this environment where liquidity is shared and users are shared, but at the same time, there's no cost to chains to join the Agglayer. And so like, if you're a chain, you can join the Agglayer and you can use whatever staking token you want or whatever governance token or gas token you want. You can use whatever execution environment you want. And so like for us, from a strategic perspective for the Polygon project, like the thing that makes sense is getting as many chains onto the Agglayer. And the situation right now with optimistic rollups is we have enormously successful projects like Arbitrum and Optimism that have huge amounts of value and liquidity and usage that are fragmented across different chains in the Ethereum ecosystem. And this like cannot continue. Like this is not like a model that will support mainstream adoption or like an internet scale crypto ecosystem. And so for us, like for me, the ideal scenario would be that Optimism or Arbitrum took the tech that we've made open source and upgraded to become a ZK rollup, because it would mean that they could join the Agglayer. And like fundamentally, that's a positive sum interaction, because they get access to all of the existing liquidity and apps and users that exist in the Polygon ecosystem. But vice versa, those users and apps and NFT mints and DeFi primitives get access to any optimistic rollup that's joining Polygon ecosystem. And so like that is the long-term vision, is like building an ecosystem around the Agglayer. It's not protecting tech via restrictive licenses and trying to compete on the basis of like single chain competition.
It's very, very noble effort and very noble focus to be focused on the long-term growth of Ethereum, not just the long-term growth of Polygon, is really what I'm hearing. There's this bigger picture of we're part of the ecosystem of Ethereum and we need to support everybody in Ethereum, not just ourselves. Thank you for that mindset. I think that's so important. I just want to check quickly about, you mentioned that, I wasn't going to ask this till later in the show, but since we're bringing it up now, so an optimistic rollup could become ZK EVM compatible. Do you think that's the future, or is Ethereum base layer going to become ZK proven itself? Like, will that eventually go into Ethereum? Can you kind of paint the picture of how this all, you think this all will go?
Yeah, so both I think are true. So for optimistic rollups, it's a no-brainer now, because proving costs are so low, and so you can get rid of this huge source of capital inefficiency on your chain and allow a much better experience for users. So you can have cross-chain transactions in the Agglayer at latency of like a couple seconds versus 7 days.
It's a huge time.
It's like, you know, a couple, like a few 10,000x. And so from that perspective, like it just makes sense that if you compare the aggregate amount that users have spent on third-party bridges out of optimistic rollups with their total proving cost, it's like an orders of magnitude difference. And so there's no justification for not being a ZK rollup at this stage. And so the mainnet Ethereum question, I think, is really, really interesting, because if we envision Ethereum as being something that's powering the internet of value, or the value layer of the internet, and it's present in the existing web, then it actually becomes really cool to ZK prove Ethereum, because it means that you can have full node security for Ethereum in a browser. So you could be using like a web app or some app that requires like transfers on Ethereum or state from Ethereum, and you could be effectively running a full node in your browser with a zero knowledge proof. And so if we think about this sort of like futuristic vision where Ethereum actually does function as kind of this substrate for the internet, then I think it's like an important step toward that.
Yeah, well, especially if our objective, which I think I don't need to convince anybody of this objective, is we need to interact with Ethereum mainnet as little as possible, because otherwise where we are right now, where it's just not scalable, it's just, the cost is obscene, it's slow, it's clunky, it just doesn't work. So it almost feels inevitable in a way that we will go in that direction. So if you're a founder right now, is in your mind, how would you think through which chain I'm building on? And I don't mean necessarily like Optimism versus Polygon versus Arbitrum. I mean more so like, is ZK EVM the only choice in your mind, assuming you want to be within the Ethereum ecosystem?
Yeah, so I think in the short term, yes. So in my mind, the experience that you're able to offer to users in terms of the ability to onboard and off-ramp and transfer in and out of your app, as ZK EVM just makes a lot more sense than not just. In the future, I think one really interesting thing that ZK enables is it allows us to create ecosystems where different chains can be running different environments. So if you have like a chain that does super high throughput trading, like a super high performance DEX, you might actually not want to run on the EVM or even the Solana VM. You might want to run on something that's like specifically tuned for your application. And so it's really cool that ZK enables this, because it allows you to design an environment or a runtime that's completely specific to your application. And you can generate proofs and you can move funds in and out of that execution environment super easily.
Interesting. That is a very transformative moment. So because that's really what we need. We need custom execution environments long-term, right? When you think about, we're just scratching the surface right now of execution environments. Most of it is DeFi, some NFT stuff, even the NFT stuff. We haven't even gotten into real world assets. We haven't really gotten into identity. There's so many other areas of use cases for blockchain that are going to come in the future. And really, a lot of that is going to rely on custom execution layers and custom execution environments. And we don't really have that ability right now to do that at scale.
I think that's where ZK comes in. And that's where like building an ecosystem around seamless, low latency interoperability is super important, because you can have like users spend a lot of their time on EVM chains where tooling and wallets are actually pretty good. But when they want to do something like participate in an NFT mint that's going to millions of people, or participate in like a super scalable and high performance exchange, they can do that very easily. And those applications can be set up to serve like orders of magnitude more users than any chain could currently. And so like, if we're sort of looking ahead to like, what does crypto have to look like to support 5 billion people like the internet, I think it's really clear that ZK is going to be a pivotal and transformational technology toward that goal.
Yeah, completely agree. Let's transition and talk about the Agglayer. We've brought it up a few times. First, I want to talk about the pain. So give us the existing shit show that currently exists that led to the need for the Agglayer, because I think everybody understands these pains, but just remind us.
Yeah, sure. So right now we have, and we mentioned this earlier in the show, we have like fragmentation in the Ethereum ecosystem. So there are things that exist in different forms across a bunch of different chains, a bunch of different rollups on Ethereum. And so what does it look like to move assets and state between these chains? So if you're an optimistic rollup, like you can kind of forget it, because you either have to use a third-party bridge or you have to take on a 7-day withdrawal delay. So we're already sort of disqualified in that respect. Even for a ZK rollup, what does it look like to move state between like the Polygon ZK VM and some hypothetical other ZK rollup in the Polygon ecosystem? Right now, it's you generate a proof, which takes a couple minutes. Then you post that proof to Ethereum, and so you need to wait for the Ethereum block to finalize. So that's like 12 to 19 minutes. And then you deposit and claim on the other ZK rollup. And so all in all, you're looking at like a 45-minute latency for like a really simple cross-chain transaction. And so if we think about like what unified liquidity means, it means that we should be able to move assets between chains in a way that preserves fungibility. Like if I have ETH on ZKVM, I should be able to move it to like the OKX chain or A-Star, and I should get ETH. I shouldn't get like ZK EVM wrapped ETH. So this is a big problem in the almost ecosystem right now. And the second thing is that we should have super low latency. And so like I should be able to do that. I should be able to have ETH on ZKVM, if OKX has the most liquidity and will give me the best execution, I should be able to swap to USDC and then immediately get back my USDC on my origin chain in a couple seconds. And so the Agglayer fundamentally is looking to solve this problem of like, how do we enable these types of interactions in a way that preserves safety? How do we preserve fungibility across many different chains in a safe way? And how do we guarantee safety for asynchronous and synchronous cross-chain communication?
I think the most obvious next question is, okay, so the Agglayer provides safety for super low latency cross-chain sync and async interactions and composability. That's a mouthful. Maybe let's pick a couple of different groups. What does that mean to a dev in terms of what they can build on top on chain? What does it mean to a founder or an app builder in terms of the way they think about their project on chain? And maybe what does it mean to a user or just a standard old degen?
Yeah, sure. So I think to take the dev perspective first, it gives you more flexibility because now if you want to deliver a superior user experience, you need to be like effectively on the same chain as the apps that your users will interoperate with. Like to give the most seamless, most composable user experience, like it makes a lot of sense to be deployed in the same environment. The Agglayer kind of changes this. So now you can actually launch your app on a separate chain and you still preserve the composability and the user experience that users get from using a single chain, but you suddenly have like a ton of sovereignty and flexibility and choice in how you're designing the experience of your app. You can use like custom runtimes or custom execution environments. You can make different choices in terms of whether you're using a centralized sequencer or a decentralized sequencer. Like say you're building a game and you want to deliver like a super, super good user experience. Your users actually don't care if like it's being run in a decentralized way or a centralized way. They just want super low latency. They want reliability. And so you're able to provide that, but at the same time, give your users the ability to access liquidity for their NFTs or for their in-game assets on the chains that actually are more decentralized. And so it's like this way to avoid the trade-offs that are imposed by using a single chain. So from the dev perspective, that's kind of what you get. And I think from the founder, the sort of app builder perspective and the user perspective, it kind of follows this theme. It basically gives users the experience of using a single chain while not running into these really awful and painful scalability issues that we've seen over and over again.
Yeah, well, and what's interesting is there's this constant dilemma that builders face, whether it be a dev or a founder face right now, which is this trade-off between decentralization and scalability and speed and a good UX, right? Which really is what your users want. Yes, the objective of this whole thing is freedom of access and censorship resistant and permissionless. And like, I fully believe all that. And I think our listeners do too, but not if it sacrifices how quickly I can use an app. Like, let's be real, nobody's going to use the app then. So that trade-off has led a lot of people to build in unsecure ways, which has led to a lot of hacks and a lot of the issues that we've had in the space. And so eliminating that trade-off by saying, hey, you can still have all the security and the decentralization that you need, plus you can have the privacy extra bonus that nobody really seems to care about yet, but I think we're all going to care about it pretty soon. I think we all do. We just don't really think about it yet. You can have it all. You can eliminate the trade-offs and you can have it all from the Agglayer. And to top it all off, you didn't even have to necessarily build in the ZK EVM. You could have a project on Optimism right now and you can take advantage of the Agglayer, correct?
Yeah, exactly. So as long as the chain that you're running on or the chain that you're deploying uses a type 1 ZKVM, you can basically instantly onboard to the Agglayer. And so this is like a really powerful vision. And I like the way that you put it. I think I might get heat for saying this, but I almost think that there's like a Maslow's hierarchy of needs for users. And like people in crypto, like researchers, think that the base of that pyramid is like censorship resistance, decentralization, like nation state attack resistance. And I actually think that that is not true. It's like usability at least for the next, 10 million
For now.
users. It's like
Now.
usability, it's sort of reliability, like lack of complexity. And so as you go up the pyramid, then you can add decentralization, censorship resistance. But like ultimately what we care about is building for users that are going to get value from using this stuff. And so I think we have to take that perspective.
Yeah. Unless you're in a country where permissionless access to this stuff does not exist, or you're in a country that has serious censorship issues, then, okay, your need is probably now. And I get that, but that's just not the case of where most of these builders are. Most of these builders are in the Western world, the developed world, where censorship resistance is not as big of a deal until it is. Let's be real here. Like, that's just the way, until that moment. I hope that moment never comes, but maybe it does. Somebody said to me the other day, which actually was kind of striking, was they said they thought that the moment that Twitter removed Donald Trump was the moment that a lot of Americans started to care about censorship resistance. And I was like, oh, that's an interesting perspective, because you're probably right. Those are the moments where people actually do care. But anyways, I don't want to go too far down, but I agree in the hierarchy of needs. I think the researchers are prioritizing decentralization. I think if you went and asked the average person about decentralization, they would be like, I don't care, right? Like, just give me...
I do think that like it's healthy for researchers to prioritize that, because like ultimately we have to care about that. And like from the Polygon perspective, I think the beauty of the Agglayer is like we don't have to make those trade-offs, and we can offer different experiences to users based on their priorities. If you just want low latency for your game, use that chain. But if you want full censorship resistance, nation state attack resistance, then there's an avenue for you to use that or to access that within the ecosystem as well.
Okay. I'm going to read out a definition of the Agglayer that I took from the Stillwater podcast, which we were on recently. So I'm going to use that. I want to read that out, and then I want to get you to add on to it, because I was trying to formulate my best perspective on the Agglayer, and this said it best. Said basically what it does is it puts all assets for all Agglayer chains into one smart contract, and then using the magic of ZK creates this virtual accounting that says we're going to do all the transfers and be insured through ZK that they are the value that we say they are, but we're not actually going to move the assets on L1.
Exactly.
Does that capture it well?
I think it captures the fungibility and sort of the low latency interaction really well. The nice thing for me, for someone who's technical like me, is I get to come on these podcasts and you guys get to teach me how to explain what I'm building in a better way. So this is like a really positive experience in that respect. But I think that's a really important aspect to emphasize, which is that within this ecosystem, there doesn't have to be an L1 footprint for all of these interactions that are happening on chain. And so we're not limited by the capacity of Ethereum in the total throughput of the ecosystem around the Agglayer. And so this is like a real, like, part of what you can think about Polygon's role is to like get around the bottlenecks that are currently imposed on scaling within crypto now. And so that's like the capacity of Ethereum. It's like Ethereum's capacity for DA. And so I think that's like a really important design principle that we're trying to emphasize.
And so who's on the Agglayer now? Have there been people who've jumped on, chains that have jumped on the Agglayer? And what do you think the future is? And maybe why should a chain jump on the Agglayer? I mean, simply it's free. It doesn't cost you anything. Like, or maybe why wouldn't a chain do it is actually the better question.
Yeah. So there are chains, none have launched yet. So this week we're deploying the smart contracts for the unified bridge. And so this like creates the ability for chains to now deploy. There are actually some really cool projects that are going to be on the Agglayer that have already announced. So OKX, which is one of the largest exchanges in the world, Kanto, Manta, Near, A-Star, like a ton of different projects. And there will be more in the coming months. But in terms of why someone wouldn't deploy on the Agglayer, I mean, I'm super, super biased, but I think that it really would come down to some sort of like narrative aspect where you don't necessarily want to participate in something that's associated with Polygon, but we're actually trying to like get past that, because we view our role as building neutral public good infrastructure. And of course that will benefit like Polygon run chains that are on that ecosystem, but it will also benefit every other chain that's on the ecosystem. Our approach is fundamentally different from that which is being taken by like the optimistic roll-up ecosystems like Optimism and Arbitrum, where there are restrictions for chains that are joining that ecosystem. So there are like revenue share requirements. There are limitations and restrictions on the types of execution environments that you can run, on like how your chains get sequenced. And so for us, like fundamentally, we're not trying to impose any of those restrictions because we think that at this stage of crypto's development, like the pie is going to grow so rapidly that I'm sure some value will like circulate to Polygon chains, but it's fundamentally not about being value extractive or rent seeking or trying to like sort of capture at this stage. It's about like creating an ecosystem that's fundamentally Ethereum aligned, that can scale, and that can be like a positive sum thing for all chains that are involved.
And is joining the Agglayer a heavy lift? It doesn't seem like it. Seems actually quite simple to do.
Yeah, it's super easy. So if you're an existing chain, then you need to set up infrastructure for generating zero knowledge proofs, or we can do that for you, or sort of an implementation partner can do that for you. But otherwise, it's really just like opting in to use the shared bridge and generating proofs and kind of building. There are some modifications that will be required to take advantage of super low latency cross-chain interaction. But these are like very, very simple changes.
It's incredible how simple it is in the execution and usage of this when it is solving such a problem that we all deal with so regularly around bridging and moving liquidity across chains. And all this stuff is like, we will never get to where we want to get to without this. Zoom us out now. I don't know whether you want to talk, what time frame you want to talk in, whether it's a month in crypto feels like a year, whether it's a few months, whether it's a few years. Where does this all go? And how does this all maybe bring us back to the beginning of the episode? How does this all work together within the Polygon ecosystem?
Yeah, sure. So the timeline for the Agglayer, like I said, the bridge smart contracts have been deployed. And so the next step is proof aggregation. So this will allow us to enable that super low latency cross-chain interaction. And then beyond that, it's really just launching and supporting new execution environments. So Polygon Maiden is coming this year. We also have other developments in terms of like proving system advances and optimizations that sort of drive down the cost of running chains. But fundamentally, like the tech is here. Like the cost is already so low that right now we're just reducing latency and sort of like optimizing for that last 20% of the user experience. But it's a really nice position relative to when Daniel and I started in 2019. When we raised money, it was like a very, very uncomfortable position in certain ways because the tech was not ready. And so we were looking at this thing that we wanted to build, and we were thinking like, well, in order to sort of have parity with the experience that people expect on Ethereum, we need ZK tech to advance by like 100x. And that's like a really, really daunting thing when you're looking at it from that perspective. But the tech is here. And so like the fundamental building blocks for building something like the Agglayer have already been invented. And so this year is just about like putting in the underlying infrastructure and then focusing on like developing superior wallet experiences. Like how do you deliver user and developer tools that reflect what you can now do on the Agglayer? And so I think that's going to be like a really important component that we're also focused on.
Right. And this chain development kit, CDK, as you guys are calling it, but Optimism has the OP stack, Arbitrum has Arbitrum Orbit. That has become a big product. And I feel like every week I see another chain that's picking where they're going to develop their own chain. Do you think the outcome here is that if Optimism and Arbitrum also become ZK compatible, then it sounds like that's a strong possibility. Then the Agglayer kind of becomes this base layer that connects all these modular chains into one liquidity and state. Like, is that really where we're going? And how long do you think that might take?
Yeah. So, I mean, if you ask me, yes, like that is sort of the end game where you can be running on OP stack or an Arbitrum Orbit chain. And those technologies are amazing and they have their own benefits. But fundamentally, what you want and what you need to deliver to your users is safe and super low latency cross-chain interoperability. We can't be in this situation where every few months we launch a new chain, and there are liquidity mining incentives, and there's all this like inorganic activity that comes onto those chains. And like we play these same games that are really, really inefficient. We need to deliver an environment where liquidity is shared, where users are shared, and where if you are bringing positive economic value with an app or an NFT mint or some DeFi primitive on your chain, you're able to instantly access the liquidity and the users that you need to be successful. And so I think like we have to move to that environment. And I think that the Agglayer is the best candidate to kind of power that. In terms of when that might happen, there's already progress on kind of making that happen and supporting transitions for those chains. I think that this year will be sort of a process of seeing like getting more information on how that could play out. But I think like if you were to ask me, I think maybe sooner rather than later.
I like it. I'm optimistic with you as well. It feels like a weird word to use in this conversation, actually, but I'm with you. I think it'll be sooner rather than later. Okay, before we wrap here, I just want to give you a chance to tell people where can they follow you on Twitter, X, where can they follow Polygon team? How can they reach you if they have more questions, or is there somewhere else? Just the floor is yours for a shill.
Yeah, sure. So I am _bfarmer on Twitter. I'm not the most active user, but I try to post. And then 0x Polygon is the Polygon handle. The Polygon website has a lot of materials. And yeah, you can just reach out to me or to anyone at Polygon. We're always happy to hear from people building the ecosystem and people with ideas that just need support.
Amazing. Appreciate that. Okay. Want to wrap with a couple of fun personal questions. So you can take a deep breath. You're off the mic on the tech stuff now, although that's maybe that's the easier stuff for you. Personal stuff.
More than one thing side.
Okay. First question is one prediction for 2024, ideally other than related to Agglayer or ZK EVM, if you have any others.
Yeah, I mean, I'll cheat a little bit and say that I think by the end of the year, we'll be a lot more optimistic on the infrastructure side. Mm-hmm. We will see, like, for the first time in the history of crypto, this like view over the horizon where we can see ourselves having solved the scaling issues. And so I think that will just be a huge shift in perspective for people building in the space.
Completely agree. Yeah, knock on wood, can't wait for us to get to that day. I hope that comes this year as well. And I think you're right. One thing you've bought recently for under $100 that brings you joy does not have to be on chain.
Yeah, I actually don't think I own any NFTs, so I don't think there's like an NFT. I live in Vermont, and I think that the best kombucha in the world is made in Vermont, and so I drink a ton of this stuff, and so that's
what's the brand?
It's called Aquavite Tea. Shout out to I hope they sponsor me. That would be like one of the most satisfying I've made it moments if I could get a kombucha sponsorship. But okay.
I'll make sure I'll send them this clip from the show and see if they reach out to you. Okay, last question. If you had a billboard that 1 billion people were going to see, what would you write on it?
Oh, man.
Feel free to take a deep breath and think for me today.
And it can't be a lame answer like goes to polygon.technology.
You know what? If you were the head of marketing, that's probably what your answer would be, which is totally fine. It always splits on the show. Some people take the marketing route. Some people take the personal message to the world route.
I don't know. I mean, I think the marketing route is pretty easy. I do think, like, especially for people who have like a lot of conviction in things and are like taking a lot of personal risk, like I was in sort of 2019. I think that it like the self-doubt is like definitely real and it can be like something where you're expending like a lot of mental energy. So maybe I would put some like kind of corny phrase like the stakes are like never as high as you think, and like you should always just take on as much risk as possible, like within reason. Like the downside is like never as bad as you think, and I don't know, like bet on yourself or something.
I like that. Or the stakes are never as high as you think. That's a captivating billboard. See, you should be in marketing. There you go. You got it. Brendan, this has been an absolute pleasure. Thanks so much for giving us the time today.
Yeah, thanks, Joe. Thanks for having me.
Thanks so much for listening, and everybody, have a great day.
Thank you for listening to Web3 Academy, your one trusted source to capitalize on the next big phase of the internet. If you enjoyed this episode, please share it and subscribe or follow so that you don't miss the next one. While you're at it, there's a link in the description for our free newsletter where we provide timely and relevant Web3 insights so you can confidently build and invest in Web3. Make sure to subscribe today. One final note. This podcast is for educational purposes only, and nothing we say is financial advice. Crypto and Web3 are risky, and you should never invest more than you're willing to lose. Thank you, friends, and see you in the next one.